In the next 7 days, I'll be putting my trading strategy head to head with a viral YouTube trading strategy. Let's see which will be more profitable. To begin, we have to first search for the strategy I'll be learning and executing alongside my strategy this next 7 days. Next, we'll set up a $10,000 demo account, which will be the yardstick to know which strategy actually performs better. You weren't expecting me to put real money on the line, were you? Secondly, each strategy will have rules that give us a confirmation for trade entries. We need to eliminate discretion by all means possible for accuracy purposes. So, let the challenge begin. Alright, so after 30 to 45 minutes of searching, I eventually stumbled across this video, and the title is very simple: the only trading strategy you ever need. It's pretty straightforward, and I think I like it. Plus, it marks my criteria because it is viral. It had 1.8 million views and it was posted like a year ago. So I think this is what we're going to use. Right now, we found the strategy, so I need to go and learn it. It's time to learn.
Now know this about flow. Okay, good. So now trade is in an uptrend, which means it should only must perform trade. The only time you should start looking for short trades is price.
The guy that made this video was putting up random memes everywhere, trying to make it engaging, I get, but then it looks like a joke. You know, trading has this feel of seriousness. And one more challenge I have is he didn't specify any time frames, because when I'm trading, for example, I have time frames I use, but this guy didn't specify any time frames. I don't know if it's a universal time frame trading strategy or something like that. But anyways, let's keep watching and learning and see how it goes.
Identifying supply and demand in the market. Demand zone takes place in uptrend, supply zone takes place in downtrend. A good style of thinking is to buy from demand zone, sell from supply zone. Here's the look closely the market is going up.
I spent the weekend learning and trying to master the strategy. Now I can tell you I have full understanding of how it works. It's very much simple, although there's a flaw in it, and the flaw in it is that there's no specified time frame. It was taught on a universal time frame, like he didn't specify or use the 10 minutes or the 15 minutes or the 1 hour or so, but I decided to use 5-minute strategy throughout. So let me show you guys how the strategy basically works. It's pretty much simple. If we are in an uptrend is only when price previously broke a swing high. We wait for price to come to demand zones. The price comes into demand zones, you take your entry at that point and target the next high, and your stop loss will be below the demand zone. He also made emphasis that the demand zone must not always be at the start or the bottom of the swing. This is the opposite scenario. Price previously broke a swing low. We'll be looking for price to come into supply zones to sell. So sometimes you can have price do something like this in your swing. This is also a valid zone. This is also a valid zone, as well as this is a valid zone. So the demand zone and supply zones are not limited to just the top of your swings, which makes it simple. So in this case, what we'll do, wait for price to come here, sell, stop loss above this level, and take profits here. And on the other hand, our strategy is basically me finding a way to know whether price is going up or down. Once I have my bias, which I do through market structure or liquidity sweeps on higher time frames. On the 15-minute time frame, I'm basically looking for price to sweep a liquidity called a time-based liquidity, and I want to see confirmations on lower time frames like the 5-minute time frames or the 3-minute time frame to go bearish towards a 1 to 2 targets or an opposing liquidity. Now over to the rules of this challenge. Now, to make this fair, both strategies will follow strict rules. This is so that I can execute them with zero discretion. And the 4 rules I put together are as simple as this. Rule number 1, same risk of 2.5% will be taken on all trades. So any given trade I take would have to put on a risk of 2.5%. Rule number 2, I can take only a maximum of 2 trades a day, but just 1 winning trade a day. It's simple. If I take the first trade and it's a losing trade, I can take another one. But if I take 1 trade and that first trade is a winning trade, that's it for the day. Rule number 3, both strategies will be executed in the New York session. The final rule is no skipping. Once a setup appears on any strategy, I must take it. There's no excuse whatsoever to not take it. Now let's go ahead and create a two demo accounts. One will be named Principal Strategy and another will be named YouTube Strategy. Coming into the first day of the challenge, I was very positive, although uncertain of what the day holds. I didn't know it would be one of those days where I'd have to wait for so long before finding a trade. One of the toughest things about trading, which most people don't really speak about, is waiting. It's so tough because if you've not trained yourself to be a disciplined trader, slow days like this could ruin a lot for you. Instead of forcing trades, I just let myself get distracted for a bit. Not too long after that, the YouTube strategy finally gave an entry and almost immediately stop loss. But before I could even process that loss, another setup appeared almost instantly. This is usually the type of moves in the market that makes traders uncomfortable. But funny enough, I didn't really care. In fact, I'd be happy if this trade loses as well. I mean, after all, it's the YouTube strategy winning. It's not like it's my strategy. Kind of right now, I'm kind of jealous a little bit because I mean, why is my strategy not winning? Well, come on, anyways, it's just day one. Let's see what happens. Let's see what the rest of the days give us. Day 2 felt completely different. Unlike yesterday, setup started appearing almost immediately, and for the first time in the challenge, both strategies were active at the same time. But that's when things start getting interesting because both strategies were saying completely different things. One was looking for buys, the other was telling me to sell. Now have a look at this type of tension. This is the YouTube strategy account. This is the demand level, which I want to sell from, stop loss above the demand level and take profit at the lows, right? That's the YouTube strategy. And on my strategy is the complete opposite. Or bullish long term until price come into a point of interest to then go upward. So what I'm looking forward to doing is going long. So this is basically NAS, right? This is NAS, and on the YouTube strategy, it is also NAS as well. And moments like this are uncomfortable because no matter what happens next, one side is going to look stupid. After execution, there was nothing left to do except wait. And honestly, waiting starts feeling even longer when multiple trades are involved. At some point, the market became so slow, I literally started counting the dollar bills I had left beside me. Anything to stop staring at the charts at least. Eventually, the YouTube strategy gets stopped out, but somehow both of my trades were still running. The problem was, these trades were taking forever to play out. At some point, I just got genuinely tired of watching. So instead of forcing myself to keep watching, I left both trades to run overnight.
So it's day 3 and yesterday's trade hit stop loss. Both trades actually hit stop loss. So right now my strategy account is 9,500, so I'm down 500, and on the YouTube account I'm up 200 on that account. So you see that the YouTube strategy is beating my strategy with like $700 in profit, but it's all good. The loss can change in a short span of time. But right now I have a problem, and the problem I have is execution. So because I'm trading two strategies at the same time, the exact same time window, because I know that my strategy is optimized to function and perform best at that time window where I have price movements very rapid price movement. So I brought in the YouTube strategy to do the same thing, but I realized that it's affecting me. I am not a machine or an AI model. I'm a human being. So it's not easy for me to recalibrate my mind for a different strategy, analyze, execute, and then recalibrate my mind for another strategy. Like yesterday, my strategy and the YouTube strategy had the exact same points for, but my strategy was selling and the YouTube strategy was going to be buying. Imagine what it takes to execute, to analyze and execute that strategy, and analyze and execute my own strategy too at the same exact time. It takes a lot of mental stress, and with trading, you genuinely don't need that. So I've decided to make a change now where I will be trading the YouTube strategy on London sessions, like in the mornings, like right now. The time is like 9 a.m. my time. Okay, so I'm trading the YouTube strategy in London session, and in New York session, I have all the time to trade my own. And in London session, I would also be able to maximum focus to trade the YouTube strategy. Right now, I have a buy limit set for a trade on, I think that's Nasdaq, for the YouTube strategy. So hopefully that trade goes well, and then I know that this strategy has actually beat my strategy hands down. I'm not worried anyways, but I'm worried at the same time. Anyways,
The limit order got activated shortly after. The market was terribly ranging. I wonder how you all cope with trading London session. An hour later, I came to check how the trade was doing, only for me to find out we were the liquidity. Now it's time to trade my strategy. I spotted an entry didn't activate, so I deleted the order. A few minutes later, there was another entry. Remember I told you guys we were bullish from yesterday for my strategy, so I'm still riding that bullish wave. The market was also ranging in my session. It's probably going to be one of those Fridays where I have to hold my trade over the weekend. Came back hours later, we were deep in profit, but the markets will be closing soon. So I moved my stop loss to break even to avoid Sunday night's opening and gapping into my stop loss. You know how that thing usually happens nowadays. $370 in profit and the markets are closed. Just imagine the market opens with a tweet from Donald Trump and then price jumps my stop loss and sends the account to like $7,000. I'll just faint. Anyways, that didn't happen. The market just opened and it looks like we're safe. Very much anticipated. We have a buy limit set on the YouTube strategy. I was legit praying for it to hit stop loss, and they did. Sadly, there were no trades for my strategy on day 4. So it's day 5. There was no trade in London session for the YouTube strategy. And for my strategy, we're still riding the almighty bullish wave I've been screaming to you guys about. So you just watch how this trade is going to fly to take profit now. So it looks like we hit stop loss, and that's exactly what happens to me every single time I try to show off. Fuck it anyways. Day 6 was quiet. I searched the charts for setups, but nothing really stood out. And honestly, this is where a lot of traders lose discipline. Because when the market gets slow, you start feeling the urge to create opportunities that are not actually there. And most trading losses don't happen because of bad strategies. They happen because traders can't accept inactivity. So on today's trade, after I searched and waited, both strategies gave me nothing. Instead of forcing setups that are not there, I decided to step away from the charts for a while. Sometimes the best trade you can take is no trade at all. While waiting for gym time, I seized the opportunity and started reviewing some of our investor reports for the year. Moments like this just remind me that trading is not always about catching entry. There's a bigger picture behind everything you see. Eventually, I decided to leave the screens completely and head to the gym. You know, one thing trading taught me is that staying in front of the chart all day doesn't automatically make you productive. Sometimes you need to disconnect before you start forcing decisions and ruining yourself. By the way, that right there is Groove Happy,
There's only one group happy on earth.
my tight man. Groove delayed us at the gym, so we got back home a little later than expected. Or I just used the time I had left to prepare for the one-on-one mentorship classes I'll be having shortly. Day 7. The final day of the challenge. At this point, both strategies had already shown strengths and weaknesses. So all that was left now was to see how they handled the last session. London session gave the YouTube strategy its first opportunity, but the market started playing games almost immediately. So the order actually never activated, and price ended up running straight towards the target without an entry. Not too long after that, another setup appeared. This time it was for sales, and unlike the first one, the order activated almost instantly. I genuinely thought this trade would go straight to TP, but and just like that, that was the end of the YouTube strategy for this challenge. Now it was down to my strategy. I had one clean entry, but unfortunately, that trade lost as well.
After 7 days, my strategy won, but honestly, that's not the most interesting thing I learned about this challenge. The most interesting thing is actually how close the results were. You see, a lot of times, traders, we find ourselves wasting time hopping strategies. We're looking for the quote unquote best strategy, and the intention we have is that that strategy will be what will lead us to profitability, because it sounds logical now. If you have a better strategy that have a higher win rate, you'll be able to make more money. But looking at my strategy that I've built for a very long time, compete with a strategy that I learned in under 2 days, I can tell you for sure it was an eye-opener. Any strategy that has a genuine edge can stand the test of the market. But then the problem most times is not even the strategy. The problem is the trader behind the strategy. Think about it. If I give a profitable strategy to an undisciplined trader, there is a very high chance that that trader would flop, regardless of the fact that he's trading a very good strategy. On the other hand, if you give an average strategy that has a proven edge to a trader who is disciplined, who knows how to make things work, you would be surprised to see that that average strategy would outperform the person who has a very good strategy but is not a good trader. So instead of us always chasing strategies, let's work on ourselves. If you, the trader, becomes the best version of yourself, you become the best possible trader you can be, strategies would no longer be an issue, because you can take any strategy and make it work. If you become a better trader, you make money. But if you keep being an undisciplined trader, you don't have discipline, you don't understand risk management. Even if you understand risk management, you don't understand how to even apply it properly and consistently. Emotions, just 2 losses or 3 losses in a row, your emotions are all over the place. You're trying to recover money, you're trying to do this and do that, and all of a sudden, a so-called good strategy will just corrupt it. And it looks like, oh, the strategy is the problem. Because most times, because of the strategies you take, you don't even give strict rules to them. So you can tweak things and you don't even know that you've tweaked something, and all of a sudden, a beautiful strategy no longer works. Okay, so be the best possible version of yourself. Understand risk management, understand psychology. Psychology is all about yourself. Psychology is all about mastering yourself and being able to execute under emotions. Okay, and that's just basically for this video. If you want to be a part of the Telegram community where I drop my daily trades and psychology and mindset tips, the link to join is in the description. It's completely free, so you don't have to stress about it. If you're interested in being part of the community, you can join. It's a community where you can chat with other members of the community, you can reply messages, you can, it's not like the regular communities, the regular forex communities where you just put the emoji and state your emotion. No, there's actually a comment section, so the chat box is open. So whenever I drop anything, you can ask me questions on anything or any thought or any idea. With that being said, remember, in trading, finding an edge is important, but exploiting that edge consistently is what gets you paid.